Kevin Wadsworth from Northstar BadCharts.com is back again to talk about the volatility and possible momentum going on with precious metals. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Kevin Wadsworth, welcome back to Metal Money. How are you doing?
I'm doing great, Patrick. How are you?
I'm doing great. Glad to have you back on. Kevin, last time we spoke back on December 13th of 2021, you had said that we are on the cusp of a gold and silver breakout. You were right, my friend. So I want to ask you, what were you seeing back then to make that call before any of the current crisis going on with the Ukraine broke out?
Yeah, it's a good question, and that's why I want to show this chart here. It's actually the gold chart, and it's a chart that I drew back in 2019, Patrick. And as a technical chart analyst, we're constantly scanning for breakouts, breakdowns, and patterns. A lot of it's pattern recognition. And in this particular case, gold was clearly carving out a perfect geometric arc. It had broken out of horizontal resistance back in 2019. And putting evidence together, multiple strands of evidence, my conclusion was that we were going to see the completion of the 10-year base with gold hitting previous all-time highs. The arc formation and drawing of the chart was what enabled me to not just estimate the price, but also the time that these things would happen. You can see there on the forecast issued in 2019 that the breakout was predicted to happen, right now in 2022. And if you look at the bottom right-hand chart there, it shows you what happened next over the sort of 2 or 3 years after I made that prediction. So when I spoke to you earlier on, you can see that we're closing in on that breakout. Everything had panned out exactly as we'd expected, and of course, we've now broken out. Gold is now pushing back towards its all-time highs.
Yeah, once again, great call there, Kevin. Gold looks to have a clear shot at getting back to all-time high levels in the short term. Can you tell us what you see as probabilities for support and resistance levels for gold in this current environment of extreme uncertainty?
Yeah, well, support levels, working on the assumption that gold pushes through the monthly defined highs, which were around about, I think if memory serves me, I'd have to go back to the chart here, but it was below $2,000. I think it might have been somewhere around about 1975, that kind of area. But once we get through those monthly defined highs, I mean, of course, March is a quarterly close, so March is even more important than any sort of regular month being a quarterly close, and we can start drawing some strong conclusions. But very clearly, if we get through that previous all-time high, then that turns into support rather than resistance. So that then activates our upside targets, and the upside targets are anywhere in the region of $2,300 to $2,600 as an initial target area. How quickly we reach that point and in what fashion we reach that point will then inform us as to whether we're likely to see anything close to the $3,000 area before we start to pull back into the 8-year cycle lows in 2024. So we've got our eye on those 8-year cycle lows and anticipating a strong up move before we descend into those lows.
Kevin, likewise for silver, silver had a significant weekly close last week. It finally closed above that 200-day moving average, and it made a higher high than the last high back in mid-November of 2021. What in your technical analysis are you seeing with short-term support and resistance levels for silver?
Well, before we get to that, do you mind if we just go through a few charts that kind of lead to that conclusion, and just try and what I want to do for people who are watching and listening is just quickly frame where we're at, because this is highly unusual, and I know we normally just would sort of discuss the support and the resistance level, but first off, I think it's important just to say what an extreme position we're in with everything that's going on in the world at the moment. I'm not going to talk at length about the global conflicts and all that kind of stuff, but I'm focusing on the technical analysis here and very mindful of everything that's going on in the outside world. So, we're in a situation where we're not just talking about high inflation, we're talking about potential hyperinflation. Here in the UK, of course, much like the rest of Europe and around the world, we're seeing incredible moves in energy prices. 1,400% in the last 2 years, and we're 400% above previous known highs. Same with gas futures as well. We're at 4,600% above where we were a couple of years ago, and 300% above previous known highs. So these are incredible moves that you could, legitimately describe as hyperinflation, not just inflation, but hyperinflation. Don't forget, of course, energy costs are going to feed into everything, not just gold and silver, but the US Producer Price Index is going off the scale. We're seeing vertical moves here, and these are costs that are going to feed in to everything over the next few years. Society does not really, I think, yet quite understand what it's facing here with these cost increases. We're looking here at the oil chart. Of course, oil breaking towards its previous high at 147. This is West Texas Intermediate crude oil, with a monthly close above 115 there, indicating that 147 is the next target. Of course, we could hit 147 much quicker than that and before the end of the month. So again, these energy costs are incredible. The US dollar index, is in an unusual position in that it has actually broken above a key level that I've identified as being highly significant. We've got another 3 weeks of the month left yet, roughly speaking. My expectation, strangely, is for a lot of people anyway, is for the US dollar index to reverse. And you can see the 7-year rate of change indicator on the bottom of the chart there. And each time the US dollar index has broken upwards, the rate of change has been rising and passing through zero. You can see on both those previous occasions, the US dollar index was rising, the 7-year rate of change was rising and passing through zero. What is it doing now? Well, it's falling and passing below zero in the wrong direction. So that is a very strong piece of evidence that regardless of what's happening right now over the last few days and the US dollar index breaking upwards, it's a strong indicator, for me anyway, that we could be seeing a false breakout to the upside here. Now, I could very well be wrong. US dollar index could go to 100, 120, 100, whatever. But the evidence that I'm seeing is giving me a warning sign that this could be a false move with the US dollar index. Of course, gold has been moving and silver have been moving in the same direction as the US dollar index in the last few weeks. So they've been going up. Precious metals have been going up regardless of the US dollar index rising. Now, that does happen historically and can happen for several weeks or even a few months. But generally speaking, a falling dollar index is what's going to ignite or help to ignite a really rapid and violent move in the precious metals. So that theory, if it pans out, would fit with the idea of gold and silver being on the cusp of a much bigger move. So the US dollar index is something to watch very closely. Producer price indexes across the world. Here's Germany. Just to put it into context, the PPI for Germany post World War II was very high. Paying for everything that had happened during the Second World War. Of course, costs were rising sort of exponentially then. The 1970s crisis with high inflation and the oil crisis. You can see the PPI peak marked on there. Well, we're beyond both of those. We're in truly historic territory here, unlike anything that we've seen either post World War II or probably going all the way back to the 1920s depression. Here we've got gold spot price, and just to set into context what is reasonable, what I think is reasonable as a move. Again, with a 7-year rate of change indicator showing how early this move is for anybody who thinks that gold and silver are getting stretched and that we might be somewhere near the end of what's unfolding as far as their price moves is concerned. We're clearly and very definitely not. And we are right at the start here of a breakout and a sort of a historic move to the upside. So $6,000 is perfectly reasonable price of gold. Now, whether we reach that ahead of the 8-year cycle low before 2024, or whether we rise to say 2.5 to 3,000 first, and then pull back and then rise to 6,000, is a moot point, and we don't have a clear roadmap on that yet. But that will become very clear with time. But just so that everybody has in their mind that $6,000 is not an unreasonable target for this move. So getting back to your question just there, Patrick, on silver. The key level that I'm watching for silver at the moment, for various reasons, is $28 to $28.50. Okay, now that is very important for a whole variety of reasons. You can see that the two horizontal lines I've drawn on the chart there, at that kind of level, $28 to $28.50. Will be the final hurdle for silver to overcome. It also coincides with the monthly defined Ichimoku cloud. Now, I know a lot of people won't be familiar with what the Ichimoku cloud is, and it's not really particularly important, except that you can see the red and green shaded cloud type thing on the chart there. Trying not to get too technical about it, but what you can notice is that when the price attempts to push through that cloud, as it did in the 1990s, it very often gets pushed back. That red cloud in the 1990s pushed it back until it gained enough momentum and energy to burst through. We've been below that cloud for a period of time now, and we've finally built the energy and momentum to make a push through that cloud, and it's targeted a weak spot in that cloud where it's particularly thin, which is quite common. So we're, in my view, going to see that $28 to $28.50 area turn from resistance into support as we push through it. And the first target area is around the sort of $34, $35 area, which is where the previous sort of historic monthly closing highs have been. Of course, the all-time intra-month high is well above that, close to the $50 mark. So that sort of mid-30s area is the target area, where it's quite reasonable to expect some consolidation, but with the backdrop that we see in markets at the moment, I'm not going to guarantee any prolonged period of consolidation. We just can't be certain about how quickly this is going to move once it bursts through. Much higher targets do lie above. However long we linger around in the mid-30s, the targets above that, the next sort of targets I'm looking at are in the $70 area, and then around about $100. Longer term targets, when you look at the gold and silver ratio, and gold perhaps moving to the $6,000 area, it wouldn't be at all unreasonable to expect silver to be perhaps somewhere around $200 to $300. So I know these numbers sound absolutely crazy, but when you use history as a guide, then suddenly it doesn't become so crazy. So one step at a time. I'm not focusing on $200 or $300 at the moment. Just one step at a time. Let's get past 28 and a half. Focus on the mid-30s, and then take it from there.
I like those numbers, Kevin. And with your background as a meteorologist, if you're talking clouds, I'm listening, my friend. Now we've had a guest on who talked about the importance of momentum, and obviously world events are giving volatility to precious metals, the price action. However, are they giving momentum as sustainable momentum, reaching out from short term to mid-term to long term to hit those targets that you've given?
Yes, absolutely. I mean, just looking back at that momentum chart there for gold, you can get a very good idea of what's going on under the hood. As my American colleagues would say, or under the bonnet, as we say here in the UK, you lift the hood, you lift the bonnet, and you see what's going on under there. Is the vehicle moving with sustainability, or is the engine about to break down, and are you going to be stranded on the side of the highway? So when you do that and you start looking at the momentum indicator, you can see that 7-year rate of change. I mean, it's barely even got moving yet. And if you overlay, actually I haven't shown it on this chart, but if you overlay the 36-month moving average on there, we have just broken above the 36-month moving average on the rate of change indicator, and that is a very, very bullish and strong sign that we are starting this new up leg. And really what we've been doing for the last year and a half is just consolidating and building the energy and the momentum that we need to sustain this big move. You don't want to start a big move feeling exhausted. You need to start if you're going to climb a mountain, you have to do it with plenty of energy in the tank. And looking back at the 1970s, you can see how that 7-year rate of change, how high it climbed, and how long it stayed elevated up there for. So, as far as timelines are concerned, we're looking at a sustained move here into the latter part of the 2020s. So I'm looking at 2027, 2028 for us to start thinking about peaking with this move. So that's after the 8-year cycle high, where we get another big move up, and then at that point, it may be time to rotate into something else. But this is really just the very, very early stages.
Kevin, recently you had sent out a tweet where you had said that these charts are beyond belief and the implications are profound for every one of us. And one of the charts was a cup and handle pattern for silver that you said has been building for 50 years, 50 years. And this is kind of hard to comprehend. So, can you help us visualize and sort of wrap our heads around a 50-year cup and handle pattern and what it means?
Yeah, so people might not have noticed looking at this chart because I was talking about the top right-hand corner here in of the chart and what's going on at the moment. But if you zoom out and just look at the whole thing, it's been building since the 1970s. So that entire pattern is a large arc pattern. An arc is another word for cup, of course. The charting term cup and handle pattern. So you see this handle on the right-hand side here, and this is the cup. This shaded sort of orange area. So you've got a cup and you've got a handle there. And the handle is also reinforced and made even more valid by the fact that it is actually another small arc contained in there. So you've got an arc here that's about 10 years in the making, and you've got a much larger arc here that is sort of half a century in the making. The whole thing can be contained within an arc. So all of this from try and wrap your head around this. All of this price action from the 1970s is nothing more than a cup that is building the energy for the move that we're about to see. So everything from $4 down here to $40 up here is just silver preparing for what we're about to see. So just put that into context and just think, if this is just the warm-up, what on earth are we just about to see unfold? Hence the numbers that I mentioned a little while ago. They're not numbers that I've spoken about before, by the way. You won't have heard me talk about $100, $200, $300 before, because, as I say, one step at a time, and you just have to wait for the evidence to come in. But I think we're now starting to see the type of world that we, unfortunately, are going to have around us that will bring that about, which is why you're not. I said to you before we started recording, you're not going to see me getting, hyped up and excited about this because, there's a price to pay. Be careful what you wish for. People always say, there's a price to pay for $200 silver, $300 silver, and I'm afraid we may well be about to see that. But this chart, along with many others, that I've shown, as you say, on Twitter and YouTube. Do make me alarmed, concerned, worried, all in equal measure. But they're really just playing out and confirming what we've known for several years now, but really perhaps not quite dared to believe.
Kevin Wadsworth from NorthstarBadCharts.com. We appreciate the time you've given, and I look forward to seeing how things unfold and seeing how these probabilities come to be. Thank you for your time. I hope we can do it again soon.
Cheers for now.
There you go, Kevin Wadsworth from NorthstarBadCharts.com, sharing his views on the volatility with precious metals. As always, please leave your thoughts in the comment section below, and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.